Business trade credit. What is it? Why suppliers give it? And why you should always seek it. Keep in mind that trade credit is the second largest source of small business financing after banks and other financial institutions, according to several studies. In the global marketplace, myriad businesses, both large and small, are taking advantage of trade credit to smoothen their liquidity problems and cut costs. The question is your small business doing the same? If not, find out how to get on board today and take advantage of trade credit. Welcome back, folks, to another edition of Sweetie Kiwi. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka. Now let's roll. Today I want to talk about a quintessential topic. This is business trade credit. What is it? Why suppliers give it? And why you should always seek it as a small business owner, of course. Let's first spend some time on the definition of trade credit. Now, trade credit simply means that a vendor extends you credit terms. And by doing so, he or she is giving you extra time to pay or giving you a discount for early payment. So it's very important. There are two elements here. You have extra time to pay or you have a discount for early payment. Trade credit terms are often expressed in a kind of shorthand consisting of three numbers. There are usually three numbers. So a common trade credit term is 2, 10, 30. Now let's try to break down those numbers here. 2, 10, 30. So you have 2/10/30. The first number, 2, typically refers to a 2% discount. So you can claim this discount, this 2% discount. In other words, you deduct it from the amount owed if you pay your vendors within 10 days. That's the second number, right? So let's focus on the credit term, right? The trade credit term, 2, 10, 30. So you have a 2% discount. In other words, you pay 98% of the amount owed if you pay your vendor within 10 days. The third number, 30, means that you must pay the balance in full within 30 days. So 2, 10, 30 means, listen, I'm giving you 2% discount if you pay me within 10 days. But if you can't pay that, then you pay me the full amount in 30 days. Now, you'll often see this three numbers or some variation of it on an invoice you receive. It could be 3, 15, 45. It really depends upon the industry. We've seen some industries where the discount, the trade credit term, can go all the way to 10%. In other words, you have something like 10, 10, 30. In other words, the vendor is giving the customer 10% discount if that person pays within 10 days, right? Now, trade credit terms can vary. As anything else, we have a keyword here. The keyword is what? Credit. So the vendor will have to look at a variety of factors before granting the trade credit, right? So things like your credit worthiness, your reputation, your Dun & Bradstreet, your company's Dun & Bradstreet credit score, the financial stability or the financial condition of the company, right? So that's very important. Now, sometimes the invoice, if someone has impeccable or worse, a bad credit score, the invoice might say 1, 10, 30, meaning you get 1% discount if you pay within 10 days and the balance must be paid in full within 30 days. All right. Now, when you get an invoice with such terms on it, take advantage of them because the savings do add up. I'll talk about that a little on in this show, but you want to take advantage of it if you can, of course. Now, after defining what trade credit was, let's talk now about the dilemma that millions of small business owners in the United States and over the world actually have. And this is it. Here is the dilemma. Do you take the trade credit offer or take a longer time to pay? Remember, you have 2, 10, 30, right? 2% within 10 days or 100% within 30 days. In other words, you have 98% within 10 days or 100% within 30 days. So do you take the trade credit offer or do you take a longer time to pay? Now, which one do you go for? The discount or the longer time periods to pay? The first thing you should think about when making a decision about that, like before answering that question, is what is your cash flow? Is your company great in terms of cash flows? Is your statement of cash flows wonderful? Are you having great operational activities generating cash flow? So if you are in a business where cash is just coming in, by leaps and bounds, then you're fine. I would say go ahead and automatically take it. On the other hand, if you are in a business or in a sector where cash is tight at the moment, I would go for the 30 days to pay. That way you can keep your cash as long as possible, right? In essence, it amounts to your vendors providing a working line of credit for your business at 0% interest. If you think about it, that's really what it is. Because if you have to borrow to pay a vendor right away, you would probably pay 5, 6, 10%, 15%, depending upon your credit worthiness. But here the vendor is saying, listen, I'm delivering the goods to you and I trust you and I'm giving you a short-term loan. You can pay me in 30 days. You can use the goods, you can sell them, and you pay me within 30 days. Now, if cash flow is not a big issue, let's say, you have a bank account with a sufficient cash, you grab the discount, of course, right? Another criteria you need to pay attention to before deciding is, do you have a line of credit? Because when I'm talking about cash flow availability, this could be cash in your bank account, but this could also be cash from a line of credit. So if you're comfortable, if you are lucky, or your business is solid enough to have a line of credit at very good terms, sometimes you can have a line of credit that even gives you a 0% APR. If you tap into the line of credit, you have up to 60 days to repay it, and the bank doesn't charge you anything within that time period. So if you have a line of credit with generous terms, I would say go ahead and grab the discount. Another source of financing is credit card, right? Think about it. Let's say you have a trade credit term that says 2, 10, 30, right? So 2% discount if you pay within 10 days and 30% and the full amount at within 30 days. If you have a credit card where you know that you're getting some money, let's say after 25 days, you can actually tap into the credit card if the vendor so allows to pay for the bill. So you grab the 2%. And within 25 days, when you get money from customers or whomever is giving money to the company, you can take the money and repay the credit card. You can use the same strategy for the line of credit also. Either way, if you have alternative availability of cash, use it so you can always grab those trade discount. It's just fantastic. Those trade credit, they really do add up. I'm going to show you later on. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweaty Kiwi. I'm doing fantastic. I love this kind of conversation around business trade credit. What is it? Why suppliers give it, and why you should always seek it. If you love the clarity and quality of the content right now, please consider subscribing to our channel and turn on the notification bell. We cover a variety of topics, and business finance is one of them. And we do release new shows every single day, rain or shine. So if you turn on the notification bell whenever we release a new show, you would certainly get it. We usually release shows around 9 a.m. and 3 p.m. Eastern Standard Time when things are cool. Otherwise, it's once a day, sometimes twice a day. It really depends upon the workload we have. Now, let's have a conversation around, and also please comment below if you have questions that you would want us to respond to or topics you want us to cover. Really appreciate it. Or if you have experience with business trade credit, you want to share your insights or experience with the community, with the Sweaty Kiwi community, surely appreciated it. Share and like. Can you seek alternatives to trade credit discount? This is an important topic that many small business owners have asked us as we were preparing for this show. Can you seek alternatives to trade credit discount? In other words, That's pretty great, right? What if your vendor does not offer such terms? Because we're talking here about business trade credit. That's pretty cool. But what if the vendor says, "Listen, I'm not in the business. I'm not a bank. I'm not offering you anything." So let's say the invoice merely says net 30, because that's the opposite of 2 10 30, right? If you have net 30, that means that the vendor expects you to pay within 30 days the full amount. Then in that case, there are ways to get trade credit discounts or the equivalent. Now, you can ask the vendor for an early payment discount. Let's say you're in an industry where cash is where demand is drying up, but fortunately, your company is in a great position financially speaking. You can ask the vendor for an early payment discount. You can say, you're able to pay for 3 months or 6 months service in advance. Think about that. Vendors love that. So vendors, especially other small businesses, they will often agree readily to a 1 or 2% or even 3% discount in those circumstances. If you just ask, you need to ask. The great thing is, if you are an excellent customer, they'll want to please you. If you're a customer that pays well, they always order on time. So if by enticing you to pay early, it decreases their accounts receivable cycle and improves their cash flow. So it is in their interest to give you a discount to get you to pay early. Think about it. People always want to get the cash ASAP because you never know. Or you can also use the cash to do other things, to order new stuff, new material, new inventory. And most importantly, it decreases the vendor's accounts receivable cycle, which is very important. Investors pay attention to that ratio, accounts receivable turnover, when they have to make a move, when they have to either finance a company or acquire the company. So you just want to ask the vendor for an early payment discount. What I'm trying to say here is that if you order from a specific vendor every month and you pay them within 30 days, try to order for 90 days and pay them ASAP, pay them right away, right? So let's say you order 100,000 units of a particular product every month. Try to order 300,000 units. In other words, material inventory for 3 months. Order that so you pay 300,000 units. You pay for that amount, but you got to ask the vendor for a discount. And if you usually pay, say, 100,000 every month, and you're asking them, "Listen, I'm going to order 300,000 worth of products with you, but I'm going to pay you 290. I want a 3% discount or 1% discount or 2% discount." There is a big difference between getting 100,000 every month and getting nearly 300,000 on the spot. So that vendor is certainly going to be willing to please you. Another way to seek alternative to trade credit discount is to use a charge card that automatically gives you an early payment discount. Right? We covered this topic a few months ago when we talked about some credit cards that are just fantastic for small businesses. From the American Express Plum card to the JP Morgan the Chase Blue card, there is a wide array of charge cards that will reward you for early payment. They will give you a discount. So what you want to do here is that you basically want to tap into that. This is the equivalent of trade credit terms. It is a wonderful idea. If you use a card for purchases and you pay within 10 days, you get an early payment discount on all purchases, whether your vendor offers a trade credit discount or not, which is even great. Think about it. You can double the trade credit discount by using a charge card, because you're getting a discount from your vendor if he or she so allows, and you're getting an additional trade credit discount from your credit card company. Now, one thing that I also want to say is that you can basically, if you have savings, let's say you have a business emergency fund, you can also tap into that. You can also tap into that to really get the discounts. A lot of small business owners they're thinking on the spot. They're thinking, listen, they're thinking transactionally as opposed to thinking globally. I'm asking you, if you're a small business owner, to think globally. What do I mean? Transactionally means you're thinking, if I'm paying 100,000 and I have a 1% discount, that's 1,000. That's 1 grand. It's really not much. That's transactional thinking. I want you to think globally. What that means is that you have to think about this 1,000 over 12 months. That's 12 grand. And if this is only one vendor, it's fine. But if you had 5 or 6 or 10 vendors and all of them are offering you about 1%, you can see where the savings go. So from 12 grand, you're going to 120 grand. And all this is income, it's income coming, it's money staying in your pocket. Very important. You want to pay attention to that if you want to improve your bottom line of profits. I'll talk to you very soon. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. We're still having a conversation here around business trade credit. What is it? Why suppliers give it, and why you should always seek it. And I want to talk to you now about why do suppliers grant trade credit. Now, there are several theories when it comes to that. One such theory is that the vendor has access to lower cost financing than other firms. In other words, the vendor is just sitting on a pile of cash, or they have a lot of credit because they are a multinational, or they have a great relationship with a bank or other financial institution. They're getting cash for free, quote unquote free. So their cost of financing is kind of low. So they are able to offer you, one of their small business customers, a trade credit. So that's one theory, the theory of the company being financially set. Another theory, which is antagonistic to that first theory, is that the vendor offering such terms are in a bad financial condition. They are in financial straits. So from financially safe to financially unsafe. And that makes sense. Think about it. If a company has a bad, I would say just a bad condition, financially speaking, they will supply more credit because they need the money ASAP. So they're really willing to, I would say, just to sell everything at a discount and get the cash because they are cash strapped, right? If a company is near bankruptcy and is trying to save all the pennies that they have, chances are they are going to offer 1%, 2%, 3%, 5%. Of course, those conversations are internal because if you as a customer, that they're having financial problems, you're going to walk away from them or ask an even steeper discount, right? Another theory that observers talk about when it comes to trade credit is that it is a wonderful sales tool, and it makes sense. Think about how much goodwill you're creating by giving a customer a trade credit, a discount, if you will. You don't have to think about this in the business realm. Think about it as when individual consumers go to, we have, Black Friday, we have all those sales that happen throughout the year in the States and Canada and other countries now, where people are literally just flocking to stores. I remember when I was a child, my brother and I, we were actually sleeping in front of Macy's stores from 2 a.m. on Black Friday. And we would actually sleep there, but not for us, but we were actually selling the spots to shoppers, to early shoppers who will come and just give us a few bucks, and we'll just see them our position on the queue. So there is what I'm trying to say here is that I'm using the B2C, the business to consumer analogy to say that the same thing happens in the B2B world, the business to business world, where trade credit or any commercial credit in general, commercial discount in general, is a great sales tool. Now, why a small business must always seek trade credit? If you are in a good position, if you are in a great financial position, or even in a worse financial position, I advise you to always seek trade credit. And there are several ways, there are several reasons for this. Number one, you are reducing cost. You are reducing the cost of the goods that you're going to sell. the cost of your raw materials, your work in process, your finished goods. You also have some savings. Here I'm talking about pure cash. Pure cash. If you, instead of paying 100,000, you're paying 98,000, that's $2,000 going into your bank account. And those $2,000 can serve. They can serve in a lot of capacities. They can be very helpful. You also have the indirect element of profitability. So I'm not going to in the accounting side of things here, but actually when you prepare a statement of income, a company's P&L is called P&L also, profit and loss statement. You have on the revenue side, you have something called sales, and then you have something called allowances, you have discounts, returns, and then you have the same thing on the expense side, the cost of materials. And the cost of materials goes down because there is a contra element of discounts, and that reduces the cost, which in turn increases the gross margin, which in turn increases the gross profit and the net profit. So what I'm trying to say here is that a discount is indirectly a revenue item for you, for your business. Another reason why you want to always seek trade credit is that this sort of forces your company to have a better relationship with vendors, right? Because vendors know that you pay very well, you pay very early, you're a great customer, a great corporate customer, and this sort of cements a long-term relationship with those vendors. Another element to take into consideration is the fact that if you have a great business score, that's Dun & Bradstreet score, business credit score, that is, seek the credit. You have worked very hard to earn that badge of honor, that the label of credit worthiness. Use it. Enjoy the perks. All right. Thank you so much for listening to today's conversation. I really appreciate it. Here is a recap of today's conversation. What is trade credit? Do you take the trade credit offer or take a longer time to pay? Can you seek alternatives to trade credit discounts? Why do suppliers grant trade credit? And why a small business must always seek trade credit? I will see you next time. But until then, remember, stay marvelous.